part of our weekly webinar series that goes live every Wednesday at 2 p.m. here in the UK, 9 a.m. in New York, and 9 p.m. in Hong Kong. So if you're in America, good morning. In Europe, good afternoon. And in Asia, good evening. Thank you so much for joining wherever and whenever you are. Once again, as I always say, we would love to hear from you. So please do comment in the comments section, in the comments tab, sorry. Say hello, tell us where you're tuning in from and what your thoughts on the topic are. You can also ask questions in the Q&A tab on the right-hand side of your screen. Bear in mind, even if you're not asking a question, do have a look in there anyway, and you'll find that you can upvote questions that you find particularly interesting, relevant, or insightful, and we'll get those questions to the speakers. And also, you can get involved on Twitter using the hashtag ITI Webinar Series. Quick reminder, at the end of the webinar, we will be giving all of you a chance to meet great speakers, just like Rohan in front of you, and Barbara and Dan, who are just having a few technical difficulties, but joining in a moment at Art. And speakers like them and 200 other fantastic industry leaders that will be joining us at InsurTech Insights Europe in March. For your chance to be in a room with some of the biggest names in the industry, please make sure to secure your spot before it's too late. Just a quick reminder of the agenda. We will be looking at the Datafied customer experience. So we're going to be looking at what that customer experience is, how you can get there. We're looking at datafying and the technology you can use before going into a Q&A, and then, of course, our key takeaways. Our speakers are just joining again now, so we'll do a couple of intros. Rohan, who has been patiently waiting here, we'll introduce you first. Hey, Rohan, how's it going?
Very well, Merlin. Thanks for hosting sort of this session. I know sort of people have been sort of having some issues dialing in. I can finally see Dan online. Hey, Dan, how's it going? And we should have Barbara coming online pretty soon as well. So I'll give you a quick introduction and get sort of kickstart the session for today. I'm Rohan. I am the CEO and co-founder of Toffee Insurance. We're an insurtech startup based out of India, and we co-create micro insurance products across a wide range of mass market use cases with the help of our insurance partners. We do an end-to-end digitization of that process, everything from issuance all the way to claims. So think products like bicycle insurance, malaria insurance, backpack insurance, fitness insurance, just to sort of name a few. We're a pure digital play, but we are an intermediary, which means that we don't actually carry any risk on our own books. We use our insurance partners to really come up with some interesting constructs and personalize them to an extent where they can be understood in an easy manner by the end consumer. So if I was to sort of compress all of that into sort of one liner, we create accessible, affordable, and relevant products for the mass market in India. So that's a little bit about sort of Toffee Insurance.
Wonderful. Really excited to have you on board. Next up, we've got Dan, who's just joined us. Hey, Dan, nice to have you here. How you doing?
Oh, very good, thank you. So a little intro for me. So I've been doing data a very long time. Zulka, we've been heavily involved in data and insurance. We worked with the likes of LV and Zurich and Swiss Life and all sorts of things. But we've been doing stuff like using IoT devices in the home to manage lighting so that it looks like you're still in. We basically help with building digital and data in the estates inside insurance companies, and we spend our lives trying to, shall we say, bring insurance companies into the 21st century.
And I've seen some of your work, been really successful in that endeavor. So Barbara is just joining us now, having a few technical difficulties. What we'll do is we'll just press on and we will bring Barbara in. So moving on to our first discussion point. So Rohan, I'll start with you as we look at the customer experience. Let's start with that first question. What are these key problems with the insurance customer experience? I know lots of people have a lot of opinions about this, but I'd like to hear your side first.
Yeah, I mean, look, and not to sort of sound that we're belittling the efforts of insurance companies and manufacturers, but I think the experience has been very lethargic, at least in the Asian subcontinent that I am in and we are operating. The experience has been not made for a digital native. We're still sort of trying to upgrade a paper form sort of filling experience into a digital world. So when you don't look at a consumer from a digital native perspective, you end up sort of being reactive to the way a consumer is acting digitally, and that's never going to work. So you have long proposal forms, you have a lot of jargon and complexity, you have almost sort of nil personalization because you don't understand where the consumer is coming from. You're not building any intelligence in terms of pre-filling a lot of the information that's already required. So you're basically taking a physical form which was built, let's say 20 years ago, to underwrite a product, and you just put it online. And I think that's the first starting point for where data is not being used proactively to predict and build intelligence around, how do you sort of relate to a consumer who is a digital native. So I think from a customer experience perspective, insurance is one of those interesting spaces where at least, the two sort of points of intervention, and there are multiple, but the two sort of major points of intervention are: one, at the time of policy issuance, which is all about sort of creating the trust, all about sort of the consumer falling and understanding the products that he's trying to buy into. And once sort of that's been successful, really it is sort of the claims and the servicing, or what we call it as the moment of truth. How easy is it to sort of get the information that's required to the manufacturer for him to assess the risks. A lot of the work has been done over the last 4 or 5 years, but I think there's still a long way to go to sort of really cut that process short, and becoming intelligent about how do you assess the servicing and risk and the claims part of that entire process. So I think, not sort of trying to ramble on and on about the experience, I think what insurtechs are trying to do today, and I think a lot of the progressive insurance manufacturers are also doing today, is addressing a digital native to build the experience for the insurance buying process or the insurance servicing and claims process, rather than trying to upgrade an old lethargic process into the digital world.
Rohan, if you don't mind, because when we talked the other day, you made some really interesting points, because your focus is on giving insurance to the masses in the Indian subcontinent, and make it accessible to people who wouldn't otherwise be able to get hold of insurance. And in some senses, that is about customer experience, is it not?
Absolutely, absolutely. And so we're basically going after creating a new segment of consumer in the insurance ecosystem, which means that he actually hasn't gone through the process of buying into any traditional insurance before. And as you create that, what you end up doing is you leverage the current ecosystem. So when I say the current ecosystem, this customer, and fintech as a large part, especially payments, has already seen a lot of adoption of new facilities. So you have a consumer, a mass market consumer, who is using, let's say, a wallet ecosystem. So when you look at building an experience, you go, look, this consumer already uses a wallet. Why do I need to go back to rudimentary processes where he is thinking about payments in that manner? Can I build a layer of insurance on top of that? So absolutely right, Dan. I think it is a new consumer. It is a young consumer. India today has, probably the youngest population in the world at about, 450 million consumers under the age of 35. And these are all being born into a digital environment. So you can't build products which are archaic. You can't have that experience which is broken away from what they already experience in certain other aspects and other categories, like e-commerce, like payments, like remittances. So that has all has to come together.
I'm also conscious, I'm looking at the chat as well. Sorry, Merlin, I'm just looking at the chat. There's all these people logging on from all over the world. So, Rohan, you probably need to tell everybody where you are physically.
I'm based out of New Delhi in India. So it's sort of, for us, it's evening right now. So a lot of people coming in are in the afternoon and the morning. So yeah, so we're based out of India at the moment.
Yeah.
Dan, I wanted to come to you on this sort of on this next point here, because as our resident data expert, I mean, we're talking about, the datafication of customer experience, but I think it's important for everyone to know why data is so crucial and how it can be utilized within that kind of customer experience space.
Yeah, okay, cool. And I think for the benefits of everybody online, I'm actually in a tiny little village in northwest Scotland with a very good fibre connection. So things have moved on. Things have changed in certain industries, potentially not the insurance industry. But no, I mean, on a more serious point around data, I think the thing that's interesting in the insurance industry is going to be the use of IoT. It's going to have a very profound effect on the insurance industry in the next 5 years. And there's a very simple reason why. The use of IoT can help an insurer understand the asset that they're insuring. Very simple. And it will transform how you think about your customer experiences, because you will want to think about, for example, the example I've just given, if we enable households to be connected up, we start looking at how they switch lights on and off, when they're out, when they're not out. Can you make the property more secure? Do you understand the profile of the asset that you're insuring? Do you understand the humidity that the building's being kept at, for example? Some stuff we're working on at the moment. Again, if you put a IoT device into a vehicle, or you stream data out of the vehicle, how does that change the profile for insurance of young drivers? And it's exactly the same. And in fact, what then happens is the way you create, say, particularly in a car, the way you create a customer experience around the crash event changes completely, because it's no longer about having to ring somebody, having to fill forms in. That's all gone, because it's all happened seamlessly in the background because of IoT. And so this revolution in IoT in the insurance world, in my view, is the thing. Then data is going to drive that. So there's real-time streaming of data from the asset. And what that then enables insurers to do is to profoundly change the customer experiences, that the person taking out the insurance then has much more of a relationship with the insurer. And I think, and I'm going to bring Barbara in on this now, because when we were talking the other day, Barbara was, there is this perennial problem. You buy the insurance, you then don't do anything until you then need to claim against it. And there's this whole gap in customer experience. Now, I have a belief that IoT starts to fill that gap. But Barbara, I'd be interested. I'll stop talking.
Yes, sorry for being late. Austria obviously seems to be hard to connect. No, I had a problem with my headphone and the microphone. Yeah, thanks for being late, and thanks for giving me the honor of explaining how incumbent insurance industries face customer experience in insurance. Because as Dan just said, we have this big gap between the first time we get in contact, when we sign a contract, when the customer actually buys it and is hopefully feels protected, and the point where we have to keep our promise, the moment of truth when something happens to him. And in between, traditional insurance has not a lot of contact points, because usually the customer actually hopes to have no contact point, because usually he files a claim next time you see him. And the very interesting part, especially for traditional insurances, is how can we engage the customer? How is there any possibility to give him some sort of feeling of security, or help him manage his life better in the time between getting a policy and filing a claim, or actually preventing that it happens? I think that one of the interesting parts, what Dan says, and then sort of accompanying the customer with IoT, is that you could actually look at it as kind of prevention. So the second point might even not be happening if you help him to prevent the crash or the flood or whatever happens to his property or his health. And going there will be a long discussion.
Well, I think I'm going to pick up, Barbara, if I may, because I've just seen a question come in from Aidan in Wexford around ethical data protection. So the reason that you start talking about customer experiences is very simple, because the ethical nature of this becomes much simpler if the customer's bought into the idea that it's data that they're involved in. So the whole debate around GDPR becomes completely moot. The ethical stuff becomes moot, because you actually engage with a new customer experience, the IoT devices that they themselves have probably installed either in their car or their home or anywhere else. And the whole reason that GDPR has come about is to say, look, and the GDPR, of course, is very European, given we have an international audience, but there's equivalents around the world. The crucial thing is, if the consumer understands why they've got a device in their vehicle or their home or anywhere else, and they understand how that data is being used, and they see the benefits to them, they will sign into it. And so a lot of this ethical debate and the idea that there's blockers in there and regulatory problems in there aren't. They need to be reimagined in terms of customer experience. And as soon as you reimagine the customer experiences, a lot of these legal and privacy issues disappear because you get their permission.
And noting the Q&A here, there's another one from Steve here, who I think this is a good one for you, Rohan. So Steve's asked, how can you factor in data monetization during the business planning / fundraising process? Probably I'd like to hear your thoughts on that one.
Sorry, say that question again. I just heard bits and pieces of that. So how can we build in data monetization around building a business case? Is that what you said?
So it's during the planning and fundraising process.
Yeah, I mean, so look, I think it really depends on what you're trying to build out, right? So if you are, there is a layer of cost allocation that goes towards servicing and claims. Okay, if you're using data to build intelligence so that the allocation of costs is reduced for both the manufacturer by you doing a certain few things which are built inherently into the customer experience, you can build that as an add-on monetization strategy. So you don't have to traditionally operate as an agent where you're picking up commission only. I think depending on what intelligence you're building, ultimately it's creating an impact at the manufacturer level, whether it's faster claims, whether they now don't have to have 200 people sitting and picking up phones and going through the entire sales process. So there is a cost allocation that can be sort of reduced, and that can be built into the business model as additional ways to monetize your product strategy, distribution strategy, claim and servicing strategy. So there are multiple layers, right? So, and I think to Dan's point, it really depends how deep you want to go down sort of that rabbit's hole. And I only say rabbit's hole in a positive manner. Dan's mentioned something very, very interesting the other day, which got me thinking about some of the IoT work that they've been doing across Southeast Asia, especially around power meters, right? And I think that's a fantastic way to get a view into how do we run, auto insurance in India, right? If I understand the kind of risk, the kind of roads there are, the kind of infrastructure in terms of the houses that are, what kind of power is being used, I can underwrite products much better. So I think inherently what we're saying is that IoT tends to get noticed as, and I will be guilty of this as well, that it inherently gets seen as a first world privilege, but it's actually not. We're seeing at grassroots level, digitization of power meters. We're seeing digitization of a whole bunch of devices. Mobile devices today capture most of the information that people complain about, that they have enough data. Google does that personalization for you already, and that personalization is happening because they are capturing your movements, your lat long real time. So I think that I think a GDPR conversation is probably a deeper conversation. But Dan, correct me if I'm wrong. I think that sort of that play or positioning of IoT being only sort of towards a first world privilege is so untrue. I mean, and you guys have done a lot of work in Africa and Asia, right?
Yeah, absolutely. And I couldn't agree with you more. I think I'm going to go down your rabbit hole even further. Right. The crucial thing here, to go back to the question, which was the monetization of it, is potentially that the question is misguided. And no disrespect to the questioner here, the crucial bit about IoT data is it is going to change the world of actuaries. It is going to change the world of how you underwrite. And that is where the money is how you change the understanding of risk based on the IoT device telling you in real time what's going on with that asset. And coming back to Rowan's point about democratization, this is not a first world thing. This is anybody who has a mobile phone has probably got the best IoT device in their hand. You can do an awful lot with a mobile phone without doing any other bits of kit. Now, some insurers may feel they want to add other bits of kit, like the car industry wants to put a little device on the windscreen, for example, or somebody wants to put a device in a home for home insurance. But the mobile phone is the democratization here of IoT and of the ability to assess risk.
But it's also part of enhancing the customer experience, because again, the initial idea of insurance is the community together paying a price for the individual to be safe. And if you have more data, if you have more IoT, it's also easier to get back to that initial idea, because at the moment this is completely separated also in when the appearance of insurance. Insurance is something that you just get because you sort of pray that nothing will happen if you pay your premium, but you don't have to pray anymore if the democratization and the usage of data is more commonalized and everybody knows that how the others are behaving on a general level.
Sorry, Maria, I just got one last comment. And I think, it's interesting. I think, this whole entire sort of data debate I think insurtech sector at large has been caught into sort of crossfire because we came late to the party, right? So when everybody's sort of already gone out and done a lot of sort of that, democratization of data across fintech, et cetera, and as one of probably the last few industries which is trying to digitize and come up to speed, is where sort of that noise is now saying, well, actually, we don't know the sort of real impact or the usage of the data that's going to happen. So there's a little bit of sort of the timing of the innovation that's happening in the insurtech sector when the sort of entire debate around data protection and ethical issues is going on. And I think that's probably like I said, we get caught in the crossfire because of that.
I just wanted to come to Barbara because there's a really great question from Ed J here, and Dan, I'm sure you have some thoughts on this as well. But Barbara, so the question is, how do you identify and work with imperfect data in a scalable fashion?
The question is if you can get the customer to collaborate. So what we are trying to do is get the customer to collaborate because he's the one that has the real data and he might let us use it. Everything you have in your legacy system, and I guess a lot of huge and traditional insurance companies have a lot of data in their silos. They might not be the same. They might even be sometimes really, really contradicting. And there is no real way to get that out and understand what's the real correct data, except you have the customer collaborating. And maybe a lot of, like Rohan already said, if there's a democratization, if customers understand what the benefit for themselves and their insurance is, they collaborate. We had a test where we asked them to sort of look at the data that we have and correct it. And if they do so, they might get, I don't know, a premium for free for 1 month or something. And we had them correcting it on our portal without us having to type it in or something. So I think the way to do it is together. Even then, like if they see the benefit, if they are more secure, if their data is more correct, it's something that is maybe even a win-win situation.
Yeah, I couldn't agree more with Barbara. I mean, the simple answer is give the data back to the person who's got the contract with you, your consumers. It is their data after all. I think, however, it does raise another problem for the insurance industry, the traditional insurers, shall we say. Traditional insurers have a technical debt of legacy IT estate that's been around 10, 20, 30 years. And it's running on overnight and weekly batches that are based on some predefined idea from a CFO from 20, 30 years ago, right? But now we've got consumers using mobile phones in near real time. So the problem now comes is I serve data to the consumer, they correct it, but then the overnight batch has a problem with it and you land up with a big, huge quality issue because your data is now, I've got consumer data that they've inputted themselves, but I've got old legacy data sitting in my old slow IT systems, which haven't caught up. And actually, the challenge for the traditional insurers here is they're going to have to, we are going to have to, as an insurance industry, change all this legacy IT to basically be near real time. Because unless it's near real time, it's not going to keep up with the consumers who are already ahead of them. And if they don't do it, a new startup probably will, because they'll come in with a new bit of near real time tech that won't have any of the legacy tech debt, and they'll clean up with a customer experience which transcends everything else.
Just going to move on to our last discussion point because we're running short on time. But we always hear a lot of problems about the use of effective use of data. So, Barbara, I know you've done a lot of work in the digitizing at Unica. So I'd love to hear your thoughts on what the actual kind of what's actually blocking those legacy systems from effectively using data. So, do you need an entire transformation here, or is there something else?
Just like Dan said, the legacy systems are not up to real time. They're not up to cross usage of data. Each silo has their own data, which might contradict. And it's taking much too long to really wait for the one system that will solve it all. The approach we are trying to use is having a layer that actually feeds the data for all the systems and is real time. And we have sort of capsuled the old system, and we need to make sure that no data enters the sphere of the customer that doesn't go through this layer. It's not easy, it's not perfect, but it's also gradually removing the sort of like you have a buffer between the old systems and what you show and discuss with the customer, and then you can one by one migrate or actually also decommission the systems you don't need anymore. It will be much more flexible. You need a much more functional way.
Yeah,
and it's really expensive. You also have to think about that each of your layers needs to be regulatory proof, and the ideas that are done in Brussels and wherever keep us busy for a long time just to re-innovate all our systems.
Yeah, and if I may come in, I mean, I think one of the lessons the insurance industry should take from the banking sector is the banking sector have put in this, they call it middleware, don't they? They've put in a middle layer of proxy to give it the near real-time flavor, certainly over the last 5 or 10 years, but hasn't resolved the problem in the banking sector, at least. That the banks are still running on AS400s from the 1980s. And at some point, the fintechs will take them out. And so, yes, the stepping stone is a middleware layer or a proxy that is near real time to enable the consumer. But you do have to remember the insurance industry is going to have to switch these old bits of kit off. It's got to get rid of these overnight batches, weekly batches. It's got to get rid of all these legacy systems. Otherwise, it's going to continue to try and have to kludge the data in the back office, and it's going to land up employing lots of people to make sure the data quality is any good. So it's kind of really important that the stepping stone is good, but then it needs to be taken to the sort of natural conclusion of actually making it a modern data estate.
I also wonder if at some point there will be like the usage of using it together, like big companies doing payment services together. So you will have service providers. And the question for me is, will the insurance industry move there, like payment providers, and sort of use a white label solution that has all the equipment and all the technology and just, I don't know, put their products on it? I wonder how long you can afford to have your own system.
Just a very,
because you're going to be product or service provider. Sorry.
No, it's all right, Barbara. But just a quick reminder to the attendees, do keep on asking those questions, keep them coming in, and make sure you get upvoting as well. And if you do have any thoughts on the topic, do let us know in the public chat box on the right-hand side.
I was just going to pick up on what Barbara said, actually, because there's some really interesting stuff there around the use of APIs. So if you have service provision provided by others, whether it's in payments or anything else, you're going to need to create APIs as an industry in order to make that work. Now, the APIs, as Rowan rightly says, in India, you're using existing services because consumers are familiar with them. So, of course, you do. But actually, there's a much more profound thing for the insurance industry, which is this idea of APIs between insurers and reinsurers. And so what you now talk about is when you have reinsurance and insurance together, but they're serving each other on APIs in near real time. And they've got actual asset data because there's IoT devices on the things that are being insured. Suddenly, I'm in this situation where I can actually make quantifiable understandings of risk across a very large portfolio of items. And so this is where the IoT devices will and the use of APIs between insurers and reinsurers will profoundly change the way actuaries do business. So I'm just trying to bring some color as to why IoT is so important to the insurance industry going forward.
Absolutely.
Yeah, I mean, and then I love the world you're talking about. It sounds amazing. I'd love to sort of see that. We work with quite a few insurers at the back to sort of co-create these products, and we've had this challenge from day one of our business inception, which is getting to Barbara's point as well. Getting small changes done in legacy systems takes weeks because they have no clue what that small change will do to various sort of branches and parts of their business. And so we actually end up saying, look, don't worry about APIs, right? We'll give it to you. It's faster for me to give it to you in Excel than to you go out and sort of make this change in code. So we do a complete digitization from a customer point of view. And in some cases, we build microservices. So if you are progressive enough, here's our APIs to plug into everything from issuance to claims. But if you're not, we can't wait around for 6 months for you to change, small pieces of code. It's just, it's almost sort of an innovation killer, right? And I think that's probably where a chunk of the work needs to go in for, legacy guys. I think the problem is that the technical debt is so huge for them. Where do you start, right? That entire sort of digital transformation for big manufacturers who've been around for 20, 30 years, it's a 5-year, 10-year plan. And the way things are changing in the digital environment, when you come to the 5th year, you realize everything has changed all over again. So I think it's a bit of a catch-22, really.
It is, but I think look. So the one thing you don't do is a big bang, right? But actually, IoT is also potentially the savior here. So if you the way we would talk about it is if you think about potentially a class of products where you're going to introduce IoT, you use IoT as the thing that pulls through doing it in a new way, but you do it for the class of products. So you don't try and big bang the entire insurance company, but you say, right, for this particular class of products, because we've got IoT devices, we're going to build the entire thing from the ground up on a near real-time environment. Recognizing there's going to be some interface issues with the legacy insurance, but actually we talk about it being a thin slice. So you thin slice from the IoT device all the way through to the consumer, and you create a rich digital experience. And you do it for a very small class of products that relate to that IoT device, and you transform the customer experience for that IoT device. Best examples at the moment in the market are, frankly, insurance for young drivers of vehicles, because there is an IoT device going into it. We're working with an organization at the moment called Track Global, IMS, and they have a little wedge that goes in the vehicle and it's Bluetooth tethered to the phone. They are reinventing it with their product Carrot, and they're white labeling to some of the others. They've got an entirely new stack. They're not reliant on any of the old technology. And as such, they then operate near real time. So the way you think about engaging with customers, the way you think about policy management, the way you think about claim management, the way you think about how the actuaries underwrite the asset, it can entirely change because of that. But so I think the industry can do it, but it's going to have to think about IoT for thin slices of products across its estate, and it's going to have to move through its old legacy products over a period of time. It's going to take them a few years. Yeah. But I certainly wouldn't do a big bang replacement of an old IT system, because that's frankly going to blow you up. But
all right, that is all we have time for on the discussion points. So we will be moving on to the Q&A. Just before we move into the Q&A, I just want to remind everyone about our next week's webinar. We will be looking at customer experience again, the human digital hybrid in an increasingly digital world. How do you maintain the human touch within that customer journey? So make sure you have a look at the top of your screen now. You should be able to see a link to register for next week's webinar. But very quickly on to the Q&A. Some absolutely fantastic questions coming in already. Make sure you get a few more questions in. We'll have time to get to them, and make sure you upvote the ones that you really want to know the answers to. Dan, I'm gonna come to you straight with this one. There's from Sophie Madison. Really interesting question here. So Sophie's asked, how will the insurance industry overcome the challenge of sharing data in order to obtain more accurate results via AI?
Sharing data, more accurate results from AI. I'm going to break that question in two, if I may.
Please do.
So, sharing data. Let's just talk about sharing data before we get into AI. Why? The first question is, why does the insurance industry even want to share data? Okay. Now, there are, and this is where I say there's a profound change in the way actuaries think, because if you look at how actuaries operate, they base what they do on sharing data in an anonymous way to think about how they categorize risk. Now, if you were to go to an actuary and say, well, actually, we're not going to give you shared data. What we are going to give you is the actual data about the asset you actually want to insure. It completely changes the paradigm of how the actuary works, at which point the whole premise of why do we sharing data becomes a little bit moot. Now, there are always needs to understand how, and this is about hyper-personalization in essence. So there's always needs to understand where does an individual who's being insured or an asset that's being insured, where do they fit within that environment? So you will need to share data, but again, you ask the consumer for permission. And most consumers are reasonably comfortable with it, as long as what they don't feel is they're going to get bamboozled by some spam or something, and they feel it's very, very beneficial for them to share. So as Barbara rightly says, they will do things if you suggest to them that they might get a benefit, be it a month's free insurance premium. So you can share data, but I challenge the whole basis of does data need to be shared at scale in the insurance industry? I'm going to suggest not. Now, if you come onto the AI space, the issue with AI for me is that the crucial thing that you do in machine learning, and I'm trying to avoid the word AI, anything that uses machine learning needs a feedback loop, because otherwise you have nothing to learn against. Now, there are two major feedback loops in the insurance industry. One is the feedback loop with the consumer, and the other is the feedback loop with the asset that you're insuring. So if I get my data right with my consumer, with a wonderful customer experience, and I am able to understand the feedback loops that relate to how they are engaging with me, the insurer, then I can do AI with that. If I have feedback loops with the asset that I'm insuring, I can do AI machine learning with that as well. I'm not sure doing it at aggregate scale globally is the answer, but an insurance company themselves might say, right, if I have in Rohan's space, Rohan has 1 million customers. So I want to do some machine learning across my 1 million customers, but I'm going to be very clear with my customers why I'm doing it and what benefit they're going to get from it. I'm not so sure I would want to see machine learning across shared data for the entire industry. I think that is unleashing something which the consumers won't understand and won't sign up for. So, but again, I challenge the whole idea of why would you share data between, if I'm trying to insure an asset, I actually want to know about the asset in reality. And the only reason for sharing data at the moment in the insurance industry is that the actuaries are trying to build a proxy effectively for the particular asset they're insuring at the time.
Mm. It's really fascinating stuff. So it's not necessarily about the kind of overcoming the challenge of sharing data. It's more about why do you want to do it in the first place. There's another question here from Jack Turney that Barbara, I'm going to come to you on this one. So how can carriers modernize and blend legacy warehouse capabilities to align with new technologies? We sort of touched on that earlier, but I think it's a slightly different question.
It's quite similar actually, because again, you need a middle layer, or however you might call it, and you need to start building up this layer or data lake or warehouse or whatever the name is, with the data you get from customers. And gradually you need to fill in the other ones. But as Rohan also pointed out, it's extremely expensive and it's extremely cumbrous to go through all the silos. So what we are trying to do is that with each contract we have, all the old contracts and all the old classes of products, we try to migrate them to one class of products. And each one we migrate, we put them in the new data lake, and we have the new data, and we try the really complicated thing is to keep the data that you bring in the new data lake on top and actual all the time. And this is something where we do have regular circles with our customers again. The real topic is you need a data management team behind it. And that's something that has only been recently discovered in big insurances, that you really need to dedicate people to data management, that this is an actual work you have to do before you start talking about AI, before you start talking about the machine learning, because it's garbage in, garbage out. If you put garbage data into machine learning, you will get results that that bring you nothing, basically. So the real groundwork needs to be done. And again, you can unfortunately only do it gradually. So I know insurances that start with the financial data. I know in our insurance, we start with the customer data, and we're going there step by step. If you want to do machine learning, if you want to do IoT, whatever you want to do, if you don't have the quality behind it, it doesn't make sense.
And Rohan, come to you for the first question of your Q&A here. So there's an interesting one from Monirul here, who says, or he asks, what's the key customer data that is actually missing or is being used wrong in your experience, and how can you improve on that?
Oh, that's a long one. Look, I think, yeah, look, I mean, look, and I think it's not about what is sort of the key customer data which is missing. I think, what Dan pointed out earlier, which is that actuaries are using models which were built, eons ago to underwrite risk, which means that essentially, let's take an example. If you are underwriting a health insurance policy, the moment I say I have pre-existing conditions, automatically it goes into something that requires another couple of weeks of assessment and medical tests and so on and so forth. Now, the pre-existing condition could be very, very minor or minuscule in terms of, an average. And so I think it is sort of the generalization of just because you have a pre-existing condition, it's an adverse selection. And because it's an adverse selection, I have to do a price loading and your premium has to be X plus 30%, right? Now, there are so many wrongs in that process that you actually don't understand what the consumer lifestyle is, right? So I think one is we're taking data in sort of black and white, and we're not understanding. So there is no sort of sense of there are capabilities available for you to understand the lifestyle of an individual customer today. If I go back to the same example, and I don't need to sort of wait for medical tests and assessment to give you a product and process issuance straight away. So that the mistrust in this entire space comes because you go, buying this should have been so much easier, but now I've just been pushed into a hole where I'm trying to figure out. I don't have chronic diabetes. I have, I'm diabetic, but it's acute. It's not chronic. So I think the answer to this question is really, rather than moving into a standardized form of information, that information can very easily be, if you use the past data of consumers that have come in, whether it's basic demographics, whether it is the location that they live in. So for example, in the city that I live in, the typical AQI on pollution is, 100 times worse than it should be, right? So automatically, the underwriter should be able to say, because you're living there, the loading rate for your respiratory problems should be X plus 30%. I don't think that's still happening right now. So I think there is a lot of data pieces which are any which ways being collected, but they're not being harvested or harnessed into intelligent sort of solutions or recommendations. And that's how sort of I feel. I think it's not, they have enough data. Insurers have enough data. I think if they look and they start to put some sort of machine learning onto that data, they will get a lot of intelligent recommendations. So yeah, so I think long answer to a sort of short and precise question, I assume.
Merlin, can I just pick up, because I noticed Hugh Hessing has put a question up. He's aimed it at me.
Yeah, I was actually going to come to you on this one.
I was going to say, given his role at Aviva, I think I should probably answer it. I think I'm going to pick up on Rowan's point. So yes, actuaries always need experience. That's to be clear, and you do need access to historic data sets in order to allow you to judge historical trends, and those are very useful in building the models in the early days. To be clear, but I think to Rowan's point, a lot of these models haven't changed in many years and are certainly not algorithmic. They're very heuristic, I would suggest. So yes, you do need access to very large volumes of data. And I'm also just going to pick up another question I've seen, which is that this, what about commercial insurance? I'm just going to make the point, Caitlin has been now for quite a few years doing some quite avant-garde work with Google, which nobody in the industry has really understood. Google the visual bit of it that you will notice is that Google has mapped the seafloor of the Great Barrier Reef in Australia. And you ask yourself the question, why is Caitlin Insurance funding Google to map the seafloor of the Great Barrier Reef? It's actually a really simple answer. Caitlin want to map the seafloor of the planet because it enables them to understand risk of things like oil rigs and mining of any description whatsoever, so they can insure it. And to a certain extent, they've understood in the commercial world, they've understood that access to data here, and the question for Caitlin is going to be, how do they keep repeating that to understand how the seafloor is changing over time? But access to data and then putting sensors on oil rigs in real time so that oil rigs give you an understanding of what is going on, so that we potentially don't have things going on in places like Florida. But you do need the experiential data. Now you can collect that historically and then build it into how you train an algorithm. But the crucial thing is, as Caitlin are now discovering, is you need to create that real-time feedback loop from the IoT devices, a thing like an oil rig that you're insuring, and saying, right, I understand the sea conditions this oil rig is under. I understand the various state of play of how this rig is being used operationally. I now understand the risk profile it's got. And yes, I've got historic data training the algorithm to start with, but actually it's the real-time feedback loop which makes that algorithm and makes the job of the actuary very different to where it has been traditionally, but it makes it much more powerful in terms of how you then quantify insuring that risk.
All right, that is unfortunately all we have time for in the Q&A. So we are going to move on to our key takeaways. Rohan, let's start with you. Just a key takeaway from this conversation.
I would probably just say you want to keep it simple. And when I say keep it simple, it sounds very cliche, but I think if you look at the data that you collect through the customer onboarding, through the customer servicing, through the customer claims process, there is a lot of information there for you to get a better understanding of your customer, what his lifestyle's like, what are his sort of risks that he is, whether he's from a certain geography, whether he's a certain demographic, so on and so forth. So I think really sort of making it easy for the customer to understand the products that he's buying, not so, and if there is the ability to, tap into some of these smart devices that are, on the upwards trend, obviously a lot of it, like I said, is with the consent of the consumer. If that sharing sort of consent is there, use that data to give him the sense that, look, we're using this data to make your premiums actually cheaper or make your servicing actually better. You don't have to go through paper filling exercises to make your next claim. And I'll give you a sort of very, very quick 1-minute example of that. We launched a product, last year with an airline where it was a flight delay product, and all we needed to do was we were pulling in data from public sources. So when the flight was delayed beyond 90 minutes, the customer didn't have to actually make a claim. We just put the money back into his account, right? And that product just talks about the value for a customer where he doesn't need to sort of go through redundant processes of filing for claims. And I'll stop there.
No, it's a good takeaway. Dan, how about you next?
Oh, my takeaway from this afternoon is I'm waiting for a startup to do something really radical with a customer experience that uses IoT and becomes the gorilla inside the insurance industry within the next 3 or 4 years. And it won't be Google, but it might be somebody that looks remarkably like a fintech startup in the insurance space that does something very radical indeed.
Interesting. I'm going to keep my eye out for them. Probably good people to have on a panel at some point. And Barbara, finally, a key takeaway from you.
It makes me even more convinced that the customer is the crucial point and that you have to collaborate. If you want to improve the customer experience, you have to be transparent, you have to be fair, you should go back to where insurance comes from. IoT will help us. Yes, it can help us to engage the customer throughout your life together, not only at the policy and not only at the claim time, but in between. It can help to prevent. It can give us better data. It can give us much fairer prices. Yeah, and I'm also looking for the one that will disrupt the industry, as Dan does. I'm not so sure it's going to be an IoT startup. It might be even something more like N26 in the banking industry, but we should all be aware of that because the customer interface is the interesting part about it. The rest is product provider.
One of the key differences, I suppose. All right, that is unfortunately all we have time for in total. Thank you to all of our attendees who joined us today. Thank you, of course, to our speakers. Some absolutely incredible insights coming from them today. And of course, a special thank you to Zulka for partnering with us and for providing the brilliant Dan. Rohan, Barbara, thank you to you guys as well. As always, we'll be sending out a recording of this webinar within the next couple of days in case you missed something or would like to see it again. Our next webinar, as you can see in front of you, is that customer journeys, customer experience, the human digital hybrid, where we will be bringing in Pearl Colgreen, head of AXA Next Lab Europe at AXA, Najia, the Chief Executive Officer of Remark International, and Jörn Watzke, Senior Director of Global Business Development and Sales at Garmin Health. Really exciting panel, really exciting topic. So make sure you register your interest in the top right-hand corner of your screen, and hopefully we'll see you there. I am going to stay on just for a little bit, so I'm going to allow the speakers to leave because we are going to have a little bit of a chat about our survey and Europe 2021. But Dan, Rohan, Barbara, it's been an absolute pleasure working with you over the last couple of weeks. Thanks so much. Some really great interaction with the attendees and with each other. So thank you so much, and look forward to working with you all together soon.
Absolutely.
Thank you. Bye.
So a message to our attendees before heading off. As you may have seen, we have recently launched InsurTech Insights Europe for next year. Over 200 internationally renowned speakers will join us across over 50 sessions to cover all aspects of the insurance ecosystem. We know how important it is for you to meet all your industry peers, and that's why we are fully committed to putting on an in-person event and will not be going virtual. We have, of course, created a rigorous COVID safe strategy because your safety is our #1 priority. Of course, as always, to show our appreciation for your support of our weekly webinar series, we have a special offer for ticket holders to our event. We will be distributing exclusive content ranging from interviews with our global speakers to in-depth research reports on trending topics of the industry. If you haven't already secured your spot for InsurTech Insights Europe, simply take 30 seconds to answer the survey, which will pop up when the webinar ends, and we'll be sure to get in touch with you. Many speakers have sent me a lot of practical questions regarding the conference, which I'm happily going to discuss now. Thanks so much for joining, to, of course, the speakers who have now left. I'm going to stick around now to answer a few questions. I can see a couple questions popping in already. So we've got a question here in the private chat, hence why you guys can't see it, about who's going to attend. So it's going to be 4,000 insurance executive entrepreneurs and investors representing around 2,500 organizations from all over the world. Dates taking place on 16th and the 17th of March 2021. Really remarkable combination of decision makers in one place. Another question coming in here from Joe, also in the private chat. Feel free to write in the public chat or the private chat. Feel free. So there's a question about the networking app. So as always, we launch a networking app prior to the conference. Now, this will allow you to connect directly with any one of the 4,000 decision makers that are attending. So if it's the purpose of maybe getting a next sale, looking for your next opportunity, or recruiting your next star, this will allow you to have one-on-one, face-to-face meetings for 15 minutes with any of those decision makers. Really useful tool that we've adopted there. Question about what's included in the ticket. So it's going to be access to all the 50 or more than 50 rather sessions with the 200 speakers that are going to address the trending topics of across the insurance value chain. We're just a few bits and bobs that commonly come up. All meals are included. We do have vegetarian option as well. We've received a few questions about that in the past few days, so worth including. And oh yes, another thing included in our ticket is the networking and matchmaking service. So everyone will also have access to that networking app to allow you to set up those one-on-one meetings. Another thing worth noting is so 30 days after you buy your ticket, if things change and you need to alter your arrangements, you are able to cancel it anytime. With that in mind, you can easily secure a ticket for your colleague as well and discuss it with them tomorrow. Another question just rolling in. So you can easily pay with a credit card on our website. We can even send you an invoice if that's more convenient. Okay, that looks to be it. So excited to see how many people are joining us right now. Melanie, Will, Jeffrey, Ben, all great to see you all here. Oh, a few more tickets just coming in. So we've got one from Christina, ticket coming in from Casper, ticket coming in from Oliver, and another one coming from Sophie. So thanks so much, guys. That seems to be about it for now. But yeah, enjoy the rest of your week, and we'll see you hopefully next week and hopefully in March 2021 as well. Thanks, guys.